Hello, I'm Benjamin Cummings. We're here today with Ross Riskin, CPA, PFS, and Certified College Financial Consultant. Good to have you with us.
Thanks for having me, Benjamin.
So we want to talk about college planning strategies. And there's a lot of aspects that people need to be considering. Can you talk about what those are and how they might fit together?
Yeah, absolutely. So when I'm talking about college planning strategies, I'm really looking at three distinct things. So I'm looking at tax planning strategies, cash flow planning strategies, and financial aid planning strategies. So if possible, I'd like to try to integrate those all into one plan, but that's not often the case. But certain aspects are going to take precedence over others depending on the client situation we're dealing with. So if we're working with a high income or high net worth individual, the financial aid planning strategies probably aren't going to be as impactful, so we should then focus on the tax planning strategies for them, almost to create tax scholarships for the students through the use of tax credit and tax deduction planning related to the education incentives that are out there.
Do you have some examples of what this looks like? I think that was a good one. Do you have other thoughts on what that might look like?
Yeah, definitely. So one of the first things I usually do with a family is, first off, I try to look at their situation and see, well, are they in a position to qualify for financial aid? And if they're not, then we go right to the tax planning strategies. And if they are, then we actually have to think about, well, what types of savings vehicles have they used? What's going on from an income tax planning perspective of what's going to be reported on the tax return, where are we in the timeline, where are we in the process. So we're probably getting close to filling out financial aid forms and going through the process to see if we're going to be using loans or not, or borrowing loans, whether they're from the student or the parent. And that kind of plays into the cash flow planning strategy. So whether you're dealing with high net worth individuals, middle income, lower income individuals, cash flow planning is important for everybody. And so the use of loans, education loans from the federal government, shouldn't be ignored, even if you have clients who have saved a substantial amount of money and feel that they can just pay the tuition bills out of pocket. So they can still be benefits to using those types of loans.
That's good to know. Now, it almost sounds like there might be phases as people approach college that these different aspects need to take dominance. Can you speak to that a little?
Yeah, absolutely. So, when we're talking about clients that have younger children, obviously saving is at the forefront, right? So it's, how much do we need to save and where are we going to save? Those are kind of the two big questions. The financial aid impact is an important question, but it's something where the time horizon is so far away from when they're entering, we don't know what the financial aid regulations are going to look like at that point. They've changed already so much in the past couple of years that we don't want to bank on that. A couple things I think we should keep in mind, or I think will stay the same, is that any assets owned by the student will be assessed at a higher rate than assets owned by the parents, and there are obvious reasons for that. And then kind of as we move through, as they get accepted into high school and they go through that process, then we're really talking about, well, now, how do we pay for college, right? So that's where we're figuring out, well, what does the financial aid situation look like? What types of schools are we applying to? Are we going to need to use loans? Are we going to be able to take out loans to pay for this, or should we tap the investments we've already saved for college? So a lot of different factors there, but you're right. We have to look at each part of the timeline a little bit differently.
Hey, that's good to know. So if we're looking to integrate each of these, is there a way to bring them all together? And maybe we just covered that, but any other thoughts on integrating each of these?
Yeah, it kind of comes back to figuring out, what are the goals of the family? What are they trying to achieve? And that kind of gets more into the behavioral side of things, especially if I'm sitting down with parents or clients. We kind of figure out, I kind of show them that, okay, you're going to have a tuition bill here for $40,000. How are you going to pay for it? What's your gut reaction? Is it to tap the savings? Is it to tap the home equity loan? Is it to have the student borrow? So we start to have those conversations so I can figure out, what's the problem here? Is it cash flow? Is it they don't want to pay at all? Is it they want to borrow money? And so we kind of, once we determine where they stand with that, then I can help them with either the tax planning, cash flow planning, or the financial aid planning strategies.
That's great. Yeah, thank you for your thoughts today.
Thank you.